It's the biggest growth story on the stock market since its IPO in 2019, and 2020 had a great run. Moreover, we are in the middle of a stock market crash, and the Q4 numbers just got released of BYND. Now, I looked through it all, I researched everything, I was waiting for these numbers to see how it's all fold up, and I believe that after the stock market crash discount, I will load up BYND stock. All about it here in this vlog.
Wolf of Dubai.
Let's talk about the market here real quick. So the market is just kind of crashing, having a lot of discounts available on the stock market right now. There's a lot of pressure on stocks, and especially of these growth stocks that just gained a lot of percentage over the last couple of weeks are affected mostly with other stocks. But why is that? Because, there's some gains that was realized obviously, and this kind of high spikes in the last couple of short time are getting removed, or easily removed than, harder gained gains. However, this is one of the reasons that I believe, buy when others are fearful, and that's why it's a good opportunity to load up this kind of stocks, and therefore I believe it's the timing wise, it's a very, very interesting time to buy stocks like BYND. Okay, so I made a couple of videos in the past, and I said, this company is definitely on my watch list, but still has to prove a couple of things. Now, I was waiting for this earnings because it's the last earnings quarter of 2019 and the full year, and also to see where the management is going, what kind of vision they have, what kind of guidance they have for next year. And I have to be honest, I'm quite astonished. Now, first of all, I think the stock is about 10% in minus around Friday, and will maybe get the further discounted in the next week. But I'm definitely looking into these numbers and seeing a very, very potential company. Let's have a look. So net revenues were 98.5 million. That's a 212% increase compared to the revenues last year in the same quarter. Now, so they tripled the revenues since the last quarter, same last year. So the gross profit was 33.5 million, which is about 34% gross margin, which is not bad for a product like that. Moreover, the company did a net loss of $500,000 or 1 cent per share. This was unexpected. That's maybe the stock is still under pressure. Plus, overall stock market pressure pushes the stock further into the red at the end of the last week. However, though, if we are looking to the overall financials of last year, it looks really great. So we have revenues of 297, so almost 300 million revenue makes this company, which is an increase of 239%. Now you see 1/3 of it was just made last quarter, so you see how fast they are going, how fast they are building. So let's talk about guidance here. Now, 300 million made last year, which was a huge increase, and 500 this year. Now, this is almost double the revenue, and just to make it clear, if you're looking into this growth companies like BYND or other companies, then you have to see how can they build and suit the demand, because this kind of products, if they grow so fast, it's the problem of having a bottleneck in production rather than having the demand problem. And therefore, one sentence of the whole earnings was very, very important. Not only the guidance of 500, which is fantastic, 500 million for this company this year, and $1 billion in capabilities to produce. So even if they go 700, 800 million, demand will be so big with the new partnerships like McDonald's, Starbucks, Subway, and all of this, then this company can produce up to $1 billion in products. So this is great. This is a great vision of a company to make sure that the production capabilities is there to suit a huge growth into revenue, because sometimes companies or markets underestimate the demand, and demand is actually stronger if the product is great. I did a lot of research on the product as well. We see that the most of the reviews is absolutely fantastic, not only for people that are vegan or want to be vegan, but also people that actually like meat says, hey, this really is an interesting thing. So the gross profit was $99.8 million. Now this is approximately 33%, and this is much bigger than the 20% prior year and the 17 million that they did last year. So you see also the profit margin is increasing from 20% to 33.5%, which is very, very positive. And net loss was only 12 million or 29 cents per share. Now this was obviously double last year, which is also showing that Beyond Meat, it's maturing. It's not like a heavy debt company. It's not like a heavy losing company. They had actually previous profitable quarters, so just on the edge of profitable, sometimes not profitable, depending on the investments that they are doing to scale the product, to scale the company, which is absolutely fantastic. So these are definitely some great Q4 earnings highlights, and there are some other highlights. This is not even enough. So we having 41% of the revenue is from the grocery market. So if you see Beyond Meat products in the grocery stores that you can buy and cook at home, and about 59% is restaurants and other partners like McDonald's, other partners that are increasingly use this products of Beyond Meat to create a vegan option, because these companies want to scale, they want to reach new customers, and they can do this with Beyond Meat. That's the beauty about it. We have seen comments by other companies that they just said, hey, we cannot produce enough to cater McDonald's and other things. So Beyond Meat is doing the right thing to scale the opportunity to feed demand here, which is unbelievable. Moreover, a fantastic statement in the Q4 was also that the outlook of $500 million in revenue was actually without the expectations that there will be coming revenues by McDonald's, Starbucks, and KFC. So just to comprehend this, if McDonald's, KFC, and Starbucks are entering revenue streams or regulated revenue streams in 2020 or 2021, then this will come on top of the $500 million. This is really interesting, because these names like McDonald's, KFC, and Starbucks are actually scalability factors for Beyond Meat, and this can 10x their restaurants earnings and revenues, and therefore this is absolutely great and very positive statements. Now let's look into the balance sheet, because if you see this kind of growth stories, then usually balance sheets sometimes looks a bit difficult, because these companies have high debt, very, very low cash, but not Beyond Meat. They have $267 million as of December 31st, 2019 in cash. So they have almost the same amount in cash what they did in revenue last year. This is really high cash flow number, which is very positive. And total outstanding debt is only $30.6 million, so not even 10% of the revenue, and compared to the cash that they have, it's absolutely ridiculous that they have so less debt. Moreover, they have also the cash flow from the year before is 5 times that high, so they really piling up cash, a very cash rich operation here. And moreover, the net cash used in operating activities was only 47 million for the year ended to 37 for prior to the year. So they just use a little bit more cash for the operations every year, but can grow the revenue streams very, very much. So this is also a very healthy sign for the company. Capital expenditures also was just 23.8 million versus 22.2 million of the same year. So you see capital expenditures also just slightly going up while the revenue just explodes. So this is fantastic. This is really good numbers that I'm seeing here. So let's jump to the final conclusion. Okay, so let's jump into this conclusion of this vlog. Now, I said in the beginning, I will buy Beyond Meat, not last week, but the week ahead. I think I will use the market pressure currently to load up some cash. So I will load up some Beyond Meat stocks right there when the market goes maybe further. I hope the market goes further down so I can buy cheap. I will definitely keep you updating in the next vlogs to give you my price that I bought my stocks in. Moreover, I want to show you something which is also quite impressive. Now, if you're looking to this growth companies, the PE ratio, so the price earnings ratio, can be quite high. So, hundreds or even multiple hundreds are sometimes the reality if you're looking into such a growth stock. But I looked up the forward PE ratios and the forward PEG ratios for you, and this is absolutely insane what is there. Because if you're having, let's say, a PE ratio that's very high, let's say 100, but still have a PEG, so price earnings growth of, let's say, 100% every year, then you actually have a PEG ratio of 1. 100 PE ratio divided by growth of the earnings, which is 100, is just 1. So if it's like one very important investor, Peter Lynch, said 1 is considered to be fair valued and everything below is considered to be very cheap valued, and is lower the number is better the company, because it's growing so fast and the PE ratio can be high because they are just growing so fast. Now let's talk about this PEG ratio. So because let's see the estimates of PE ratios in 2020, which is 272.15. Now let's have a look to the growth of the PE rates. So it's approximately 1000. So you have actually 0.25 as a great number here, so way below the 1 of PEG ratio that considered to be fair valued. So this, according to the estimated PE and PEG ratios, is very cheap. Also the next years ahead, 2021, PE should be somewhere around 136. The growth will be around 100. So you have here about a little bit more than 1. And later on in 2022, you actually will have something around 1 or below 1. So if you're looking into this is very important to growth stocks, to look into the PEG ratio. And as of now, it looks really, really interesting, really, really cheap in this way. Moreover, the stock market pressure will help to pick up some stocks on the lower end. Also, two other things I want to tell you. You remember when Netflix had an extra growth? This was when they went international. Now this is something that Beyond Meat is not doing currently. So only vegans in US and Canada can experience the beauty about this product. So they want to go this year and next year heavy on international growth, and this will push the stock further up if other outlets and restaurants will start using this product. Moreover, I believe overall this company can grow to $100 billion company. So we are around $5 billion company market cap. So this is a 20 bagger potential here in this stock. And even when we just do a 10 bagger, still a great deal to try out. I also have researched a bit the management team. Ethan Brown, the CEO and founder, is still on board, which I love investing when the founder is still on board. Really great. Moreover, the market opportunities is huge. Like you see more and more vegan trends, more and more healthier trends. And in the end, they want to capture the market of real meat, which is like in the hundreds of billions. And they want to be an alternative because in the end, what's happening is animals are eating vegetables, then produce meat naturally through their bodies and have some further outside influence on their body. Sometimes there's a lot of antibiotics or other things, animal cruelty that is done on farms, which is not obviously not nice. But if we can do a meat that in the future, in 10 years, Beyond Meat will be able to make a one-to-one copy, then why not getting the scalable, mass-produced product that is most probably also cheaper than the animal product. And therefore, I believe, this is a way great future ahead, and I will update on my purchase next week. Therefore, stay tuned and thank you for watching. Maybe you subscribe and thumb up.